What is going on, traders? Welcome to this week's weekly market recap. What is a summary? Summary of this week was there was a lot of there's a few quite advanced setups. I didn't take many of them. I only took 2 trades this week, both winners. Hey, happy days. There's a few subpar setups, but you'll see that many of these tags have multiple trades in them. So there's quite a few trading opportunities. Many of them required live trade entries, live entries. I took 1 entry order and 1 live entry, but there's quite a few invalid trades, which hopefully you guys have avoided them. And there's quite a few aggressive trades. There wasn't that many losing trades, to be honest. So again, we've had a pretty good run in the markets. That many trades have just not been losses. Like, just hasn't been that many bad. There's been quite a few bad trade opportunities, like things to be avoiding. But as a summary, if you're having negative performance, the last 4 weeks in a row, if you took kind of any mixture of the valid pip snatches, and that's what we're talking about here is the pip snatches, maybe IBOs, CBOs mixed in there somewhere as well, that you should be on positive results. I go through every single trade every week that's presented, every pip snatcher that presents during the week, everything that's valid. We chalk them down to green means go, so trade that pretty much everybody should have taken. If it was within your trading window. Yellow or orange, meaning aggressive, could have taken it or couldn't necessarily recommend it. And then, so this is for our more trade-hungry traders, but just know that they're not without risks. And then you've got the red, which is just invalid. So let's work our way from bottom up. Let's do it that way around this week. So why is this one invalid? DDP here is okay. The main, the simultaneous, the break and retest, 1 hour 50, and so on. This one's trading through the 4 hour 50. I just want to showcase or remind you guys of that, that we shouldn't be trading through the 4 hour 50 EMA. That is a big no-no for the pip snatcher. If you're not part of Pro Trader Ultimate, be sure to go and enroll in that. We're talking day trading. That's how Pro Trader's day trading or flagship day trading curriculum. So carrying on up here, Kiwi Yen. We can see why was this one invalid? Now, we're going to see this quite often, I mean, DDP aside, is double tops. If we ever see a double top, bounce, that is a bearish price action pattern, and we don't want to trade pip snatchers. The pip snatcher is the path of least resistance. That's really what it encapsulates, right? So entry here, stop loss here. Like, we don't trade against that for just a 1-to-1. It's not the way to do it. So you'll see there's quite a few that have been excluded due to that double top, and for a good reason. This one here, this is supposed to be a different color. This is supposed to be that red. So it's another example here, which is why it's red. We shouldn't have taken that, and we wouldn't have taken that because the double top, regardless of the outcome. I'm not saying it's a bad trade because it lost. Those are very different things. It's not a bad trade because it lost. It's a bad trade because there was a double top, right? So moving on, Aussie Swiss here. Why was this one a bad trade? Let's go ahead and see. DDP was good, so we're in a downtrend here, right? Bearish price action, trading down to recent lows, looking very good. This one here is, it's just the 50 EMA is too far, right? So we want the 50 EMA around the pivot line, and we also have a higher low, which isn't. Yeah, well, that is a deal breaker. So one of those 2 reasons is deal breaker. If the pivot line is that high up, if the 1 hour 50 MA is that high up, that means we can only enter on a live entry. So after price rejects it and then starts breaking down. We're going to see a few examples of them soon. Pound yen. This one here. So this one is aggressive trade. Why is this one aggressive? Let's see what day it was on. Option B. So it was there. DDP on that, pretty sloppy, potentially non-existent. That candle, I'd say that's a non-existent one. I wouldn't have taken that. But why is this one aggressive? Because we would have had to also take it as a live entry, run up there and enter when price is pushing down again. You know what? I'm going to mark that one as invalid, just because that DDP is. There's no way that we could cock our head, squint our eyes, and say that was a valid DDP. It's just not one, right? So we can go ahead and mark that one as red. So nobody should have taken up. It's too aggressive. It's not one that we would have wanted to take. Regardless of outcome. Would have been a winning trade, but again, regardless of outcome, it's a bad trade. This one here. Okay, another example for a double top, right? That one should be red. So what we can see here, high. This is double top or resistance. which we can see many levels, bang, bang, bang. There's 3 levels, 3 rejections, kind of a little false break there. And then for all intents and purposes, hit there as well. So 1, 2, 3, you can count it or not. 4, 5, 6, then entry, trading through that, suicide run, suicidal. Oh, I know why this one was, I had that one yellow because, yeah, if it incorporates, if it has, actually, let's go back to the one before. Yeah, no, that's just the only one. If it has a valid trade in there, then we make it as is. So why is this one aggressive? This is aggressive simply because that's Friday. Just before market close, you're taking a pip stat entry. So the issue that we can run into is over Devil's Hour, which is the rolling into the new day, the first hour of the trading session. Very low liquidity, and this would mean that the spreads are very high. There's a good chance that when market opens, you're going to get taken out of this one. Euro Swiss, 20 pip stop loss, you're halfway into drawdown, halfway into the stop loss, so there's only about a 10 pip spread there. Chances are if you're in this trade, it would be instantly closed for a full 1% loss when market opens because spreads with your broker are probably more than 10 pips. Yeah, so aggressive one, you would have entered, and this one would have had to be aggressive because it would be entering live entry. So you would have entered after that bounce off the 50 MA, then on the way up. For me, in the last third of the day on a Friday, final day of the trading week, or the final last few hours, it's not really worth getting involved in, particularly a pip snatcher. If there's something that was bigger that we might be able to be pushing 3, 4, 5% profit targets and worth carrying into the new week, maybe carrying into next Wednesday, Thursday, Friday, then perhaps we could have taken that. But with the pip snatch, it's not worth it. Just start afresh on Monday. So aggressive one, like you could have taken it, was the summary for the Euro Swiss. Bit of a suicide run though. This one here, okay, so that's a higher high, and then okay, so there is a high here. I agree that's a high. I agree that's a high. That high is higher than that high. None of these are double tops. I mean, this high is slightly higher than that one. That one's slightly lower. It's not really double top here. It's still a bit aggressive because it's not a clean trend change. Like it's still, this here is a lower low. It's not the best, but it is one that you could have taken if you were an aggressive trader. Oh yes, I quite like the DDP on this one. We can see beautiful uptrend here. A bit of mess here. Price running up high, complex pullback. Price started momentum to the upside. It's kind of trundling its way up, on its way up to recent highs, which eventually it did hit. But at this point, yeah, so I did like that it had the 4 hour and 1 hour 50 EMA. So we're actually trading off of the 4 hour up and springboarding off that 1 hour 50. This here may have also been news on Thursday. So again, it's not one that I took, but some aggressive traders may have taken that. Right, CAD Yen, okay, here we go. 4 hour, 1 hour 50. So you would have had to take this one as a live entry. That's your only option. No, you could have taken it as an entry order back earlier in the day. But for me, once it got after 2 p.m., I was looking at this as a live entry, but price just loitered around or hung around above the daily pivot line for too long. I wasn't prepared to enter on the way back in. Earlier in the day, it would have been during Asia session. I wasn't on the charts at that time. So could have been an okay trade. Maybe you took it. If you did take it, fair enough. And like it's okay. It's not one that I'd be jazzed about. It's quite aggressive. And also our DDP is not that good because we only just had that one bearish candle. We had this one bullish candle before, a couple of little bearish things. Just a bit weird, right? But could have taken it. Could have also potentially taken it as a CBO short, trading off of 382 and targeting somewhere down there. This would be a wave 5. This would be like, I'd be interpreting this as like a wave 1 complex pullback, wave 2, wave 3, wave 4, then wave 5. So it's okay. I didn't take it, but it's one that some of you may have taken. Right, moving into green means go. Solid trades. This one here was, it was a fraction aggressive, but it was still not a bad trade, right? The reason being the DDP is a bit funny. So dollar yen, I'm going to compare these. So pound dollar. Dollar yen is what I took during the same day. Pound dollar was, so both of these are short US dollar. So this would be, this position's going down. So the dollar yen, we're going down. Dollar weakness, right? Pound dollar long means pound strength. Again, dollar weakness. It's just around the currency is switched around the other way, which is why we have that directional difference. One is short and one is long, but both of them are dollar weakness. So we can see here, this one here was actually valid for one of our playbook strategies, which is the CBO. Would have gone up here, pull back here, targeting this level here. So you could have taken the pip snatcher 1-to-1 or the CBO up there for a 1.43. Because we can see wave 1, wave 2, wave 3, wave 4, entry, wave 5, targeting there, or recent high for a similar. Oh, actually, here we go. No, it would have been more than that. Would have been 2.43 because you would trim your stop loss because you got the 1 hour and 4 hour 50 EMA in favor. If you want to learn more about that, jump on our Pro Trader Playbook curriculum, where we cover our institutional day trading strategies, which incorporate trade management. You would have been managing this position as it develops. Cool, green means go like that one, moving up. Pound Swiss, so we've got one invalid one. Why is this one invalid? Let's see, oh yes, what have we got? Double bottom, so very similar, same to the double top. So resistance, resistance, would have been a winner. But again, we're not counting it as we're not looking, winning doesn't mean good trade, and lose doesn't mean bad trade. This is a bad trade. That's a trade that we shouldn't have taken. Conversely, this here was a good trade. This is a great trade, actually. We had the pivot, we had this resistance level, we had our entry price, stop loss, targeting recent low. Beautiful, great trade. One on the left, bad trade, favorable outcome. It would have been a winning trade, but a bad trade. One on the right, great trade, unfavorable outcome. Turned out to be a loss. Remember, to be a skilled trader, all that trading is just collecting as many valid and high quality setups on your books as possible. It's not about collecting winners and avoiding losses, right? The way you collect winners and avoid losses is by taking only high quality trades and then let random distribution and your profitable edge play out, do its part. So there's a little inverse going on there, right? Right, moving on, euro dollar. We have, okay, would have taken it as a live entry only after price hit that. If you were to take this, you'd have to enter it quite late. Actually, this one is aggressive. I think I was marking this one as green means go. This one here will be quite aggressive. Beautiful uptrend here. Bounce off 1 hour 50 on the way up, boop, trading up to maybe recent high, depending where you got your entry. But again, only live entry because back here at the time of price crossing the pivot line, the 1 hour 50 is miles away. Even when our entry would have gone here, 1 hour 50 is miles away. But remember, if it enters post 50 EMA rejection, it's on its way up, you can catch that as a live entry. It's a bit more advanced, a bit more complicated, but you certainly can do that. This one here, because we were pretty close to the pivot line, still kind of within 50%. This one here would have been aggressive if you didn't take it as a live entry, as an entry order, but depending on when you place your entry order as well. So that's why it's important to capture that screenshot of when you also place your entry. Because if you placed it as price was up here, yeah, cool, you're anticipating this to converge, the 1 hour 50 to converge up closer to the daily pivot line. But however you entered this one, would have gone on to be a winner. Good trade, just a bit more advanced to get into, but either way, high quality trade. Aussie yen, right, quite a few opportunities here, some better than others by the looks of it. This one here, bad trade. Oh yes, why? Because this is looking very double bottomy to me. Bounce, bounce. Doesn't matter that we got the 4 hour 50, the 1 hour 50. It still rules it out. This is why I wanted to hammer this point home with this being a thing. So that there, bad trade. This one here, why was that one a bad trade? I've got this one here marked in as bad trade as well. Could have been entering post, yeah. Entering post 20 EMA rejection. So you can see price ran up here, pulled back to 20 EMA, and then gave us a doji. There is no down DDP after this, right? If that was a bearish engulfing candle and it closed on the daily 20, maybe, but we can see it came down, hit the 20 EMA, retracted, bounced all the way back up there, forming this little doji, this long-legged doji rejection. That is a reversal sign. It's a sign that that uptrend is going to continue. It's ready to pop the next day. So that's why that one wouldn't have been a valid DDP. Certainly not DDP short, which is a requirement. Daily direction prediction is what that means. That is a requirement for this trade. And then over here, yep, that is a higher high. So again, we're watching. Is this a double top? And how I know, I go ahead and I draw in a little level, a line at the bodies of the high. Now, is that near? No, it's clearly higher, right? versus over here, if we draw it at the bodies of this one and then go along, yep, boosh, boosh. That has rejected here and here. That's where that double bottom is a double bottom. Up here, draw it at the bodies, right? All the way down to here. Is there any rejection to the left? No. So it's not a double top. Right, so price would have triggered here, early Asia session, way you go. Would have been a win right there, targeting recent highs as well. So how many valid trades did we have that were losses, let's say? So we had that one there, win, win, and then also that one that we just looked at, Aussie yen, win. Lose, so 3 wins, 1 loss, and another win, right? So that's 4 wins, 1 loss, just on the trades I didn't take, just because of whatever reason they weren't during my trading window. But let's compare why I took dollar yen over pound dollar. It's largely due to the DDP here. See, it was not that great, yet low, high, higher, low, higher, high, similar low, run up there, breaking back up above the daily 2050, entering on this candle here. So price like had sort of closed above it. It was just a bit risky on the DDP for me, where those 2050 MA was. Giving me the heebie-jeebies a little bit, even though it was technically with the daily trend. Whereas dollar yen over here is counter trend, right? It was a short position that we entered over here. By we, I mean me. High drawn from that there to that low there. Oh yeah, so you could have taken this as a pip snatcher. Pip snatcher traders, just go ahead, we've covered that enough time. You would have taken it, entered around here, entry order on the pivot line, slightly lower, stop loss about the same, profit target, targeting recent lows for a 1-to-1. For me, I was interpreting this as a wave 5. Why? Because wave 1, wave 2, high there, and then kind of a bit of chop, and then this is the wave 3. Wave 4 pullback, entry on 382, stop loss behind 0.618, and profit target 0.618 fib extension as per strategy guidelines. No thought is involved here, guys. The only thinking is, what's the strategy? What's the rules? Stick to the rules, right? Simple as that. Entry there, stop loss there, profit target there, no trade management, bush, profit target hit 2.29%. I entered this one, I remember just as I was getting on the charts, I saw it developing, and I did a little bit of a, is it 2 p.m.? Typically on the charts, I'm ready and on the charts by 2 p.m., so typically 1:45, something like that. So I got on there, I saw it developing, wham, bam, away we go. And then pound Aussie, which was, so that dollar yen was Tuesday, pound Aussie was Friday. This one here was a little bit advanced, or a little bit, advanced. I took it as a 2-minute break and retest. So you can see price run down here. Yep, still I had a convincing DDP short there. Price had got a bit further to push down to this low here on that day. And we can see, so I didn't want to, I wasn't going to enter, the EMA was a bit too high up. I know I wasn't on the charts at that time. So price had to run its way back, sort of some very messy, complex pullback. And this is another sign. If there is a complex pullback, as this pullback, typically it takes out that recent high. So with this high being where it is, I wouldn't have taken an entry order on the daily pivot line, even if the 1 hour 50 MA was in where it should be, right? Because I know complex pullbacks, typically when the A, B, C correction takes out the high, which is exactly what it did here, before then running down. Right, so this went on, I'll have a look at the entry in a moment, but this went on to hit profit target, not here, but later. We have a look at them in 2 minutes. So you can see my broker didn't close out there, went on and happened over here somewhere. So 2 minute, we had this little trend change, price broke down. I didn't take the 2 minute live entry. I waited for it to, you guys know my style, I wait for it to break and retest. I was largely putting it on the pivot line as well. Did this break retest, triggered there, wham bam, went on to hit profit target for a 1%. So between my 1% and my plus 2.29%, I was up 3.29%, which was an absolute stellar week. I'm really happy with that. This is shaping up to be a very good month. I'm going to review all of the trades that I took on next month, on perhaps a weekly round table, because I think I'd like to share this week's performance or this month's performance We're on track. We're not there yet, but we're on track for a double-digit month, which is nice. I normally get only maybe two or three double-digit months a year, but when they do come around, it is always a happy day. Guys, that is it for now. Thank you all so much for joining me on this week's weekly market recap. If you're not a Pro Trader student, if you've managed to find this or a friend has sent this to you and you're interested in the way that we trade, if you're curious, how do I look? Here we go. Am I in focus? Sort of. If you're interested in joining Pro Trader, we are currently running a $1 first month trial offer. If you want to check that out, click the link below. If there's a link somewhere, if you're watching this somewhere online, there'll be a link somewhere around here, or the person who sent you this, get them to ping you over that link. It's protraderx.com/watch. 10-15 minute video that I created showcasing everything that Pro Trader has to offer. Would love to have you. We've now opened our gates, opened our doors to some new traders. Guys, that is it for now. Pro Trader community members, I'll see you over there. Everybody else, stay sharp. Take care of yourselves. And I'm trying to come up with a new sign off. Normally it's just peace and love. Peace and love. You can't go wrong with peace and love, right? Guys, that's it for now. Thanks so much. I'll see you in the charts.